In today's venture capital industry, we see a lot of what I call mirrotocracy, not meritocracy. Our guest and her team saw an opportunity to create an institutional fund and program that empowers emerging and often diverse VC fund managers. And you know how much I love women led funds, especially institutional funds that fund funds. Oh my gosh, this is what representation looks like. And we are going to have such a delicious conversation today. Stay tuned for the Startup Life live show. Let's glow, everyone. Hello and welcome to the Startup Life live show. I'm your host, Ande, Lyons, 4 times founder and startup champion to founders around the world. And after raising 4 businesses of my own, I have a really good idea of what you newbie founders are crawling through every single day. And even you founders who are on your next business or perhaps third business, you know each business comes with a whole new quagmire of challenges that, sure, you've built the muscles up and the knowledge up from a prior business, but oh my gosh, it's got a whole new landscape of murky waters for you to navigate. So I am so delighted that you carved out time to tune in and up your founder game here in the Startup Life live show, because as you do better, that's right, your business will do better. If you're tuning in, because we're live right now on LinkedIn, Facebook, Twitter, and YouTube. So if you're watching from the videos, please like the videos. Hello to my live viewers. So happy you're tuning in. And a hearty welcome to the replay viewers and podcast listeners. I love knowing that you're there and you're grabbing the gems from our conversations, because I know that you will grab something that will inspire you, or you can absolutely put it to work right away in your own business. If you are tuning in from YouTube, please go ahead and subscribe. It really helps me reach more folks. And if you haven't done so already, please join the Startup Life Live meetup group. This way, you'll receive an alert with a deep dive into each guest's background and what we're going to be talking about. So scan that QR code or hop on over to the links in the show notes for that. I have just a few Andelicious announcements that I want to share with you every time I go live. Of course, I'm always talking about Arlen's Academy. This is Arlen Hamilton, Backstage Capital, author of It's About Damn Time. And she has this incredible platform with phenomenal resources for founders. As it says here, everything you need to know about launching a successful business all in one place. She's always updating it. It is a terrific resource. I highly, highly, highly recommend that you hop on over there. And then we also have this amazing local group here in Boston called the Capital Network. And the Capital Network is always offering boot camps to help you get better at the numbers, at pitching, etc. And they're really about owning your story. And here they've got an event coming up to build a compelling pitch deck that can clearly and concisely communicate the most important aspects of your business and get feedback and advice from investors. And if you use Andelicious at checkout, you receive 50% off of any of the Capital Network programs. They've been around for years here in Boston, and we treasure them. And they help founders from around the world with their virtual programs as well as in-person programs. And they have a phenomenal female fellowship as well. Also, I like to send people over to grab this incredible document, How to Raise a Seed Round. It's by Elizabeth Yin from Hustle Fund. And what we love about Hustle Fund is we were founders before we sold out and became VCs, so we know just how amazing and terrible startup life is. Our team brings real talk and real advice to our relationships. Go check them out, hustlefund.vc. But also the link is in the show notes for Elizabeth's paper, How to Raise a Seed Round, because, you're a new founder. What do you know about raising seed money, right? But sometimes you need that to create that MVP or to launch your product into the marketplace. And if you haven't done so already, hop on over to buymeacoffee.com and follow me there, because this is where I store a lot of the great, delicious documents that I talk about here on the show. And while you're there, you can buy me a cup of coffee, because, This charming personality is not run on just anything. Coffee really helps a lot. So thank you. Hop on over to buymeacoffee.com/Ande Lyons. And that's where I store my investor questions and a bunch of other free resources that will help you with your founder journey. And they're so easy to download. Just click on that one button there called extras, and it's easy breezy. So let me go ahead and introduce you to our amazing guest that we have today. It's Courtney McCrea. And she's the founder and managing partner of Recast Capital, where they believe that emerging managers of venture funds, particularly those with diverse partnerships, represent both an underserved market and overlooked business opportunity. And Courtney's background has brilliantly prepared her to lead Recast Capital. As a managing director of Weathergage Capital, a boutique fund of funds focusing solely on the venture space, she made commitments to 100 funds and 7 direct co-investments. And then prior to her years there, Courtney was a general partner with Weston Presidio, a leading diversified private equity firm based in San Francisco. And, what's great about Recast Capital is we're going to be sharing this. They have a wonderful program called the Enablement Program, and it's about creating the change you want to see. And Courtney's going to go into all the details on that. So let me bring her into the room. Welcome to the show, Courtney McCrea.
Love the energy. Thank you, Ande.
I'm so happy you're here. Tell everybody where you're hailing from.
I am here in San Francisco.
Woohoo! We love that. Across the coast from Boston. Those of you who are live viewers, be sure to pop in where you are hailing from today. And I also want to remind the live viewers too that I want to learn about your company. So if you're here watching, pop in, amplify your brand. That's what I'm always saying. Share your business name, one-liner, and website URL in the comments, and we will showcase and celebrate you and your wonderful work live during the show. This gets seen by thousands of replays and podcast listens, so you never know who's going to be tuning in. And I have the testimonials, Courtney, of amazing things that happen from just, for the guests, but also for when we pop up somebody's name and talk about their company. Anyway, I'm so excited to see you and share with you. And hi, Sandra. I'm so happy you're tuning in. Sandra Babu Boating. I have no idea if I said that correctly, but I'm so happy you're tuning in. And Brent from Ottawa, who always reminds us that you need to bring on diversity and especially neurodiverse folks into your world. And he's a devoted fan from Ottawa, and he's celebrating. He won a pitch to a startup, and his pitch was successful. So we're so... Yay, Brent. All right, Courtney, thank you again for joining me today. Let's talk about your origin story, because I'm always fascinated to find out what calls, especially a woman, into a heavily dominated, primarily white male, pale and stale dominated world of venture capital. And it began with your fellowship at the Kauffman Foundation. So please share with everyone.
Yeah, happy to. And thank you for having me on. So yes, joining the Kauffman Fellows program really put me on the trajectory that I'm on now. I had graduated from business school, and my second year of business school had worked part-time for a small venture capital fund in Evanston, Illinois. Mm-hmm. And they encouraged me to apply to the Kauffman Fellowship program. And so back then, the Kauffman Fellowship program, it still today is an apprenticeship program to get folks into the venture capital industry. But back then, when it was founded, a core tenet really was trying to find more diverse individuals who had a graduate degree, who they thought if they were to get into the venture business, they would end up investing in more diverse founders.
Yeah,
and that was a long time ago now.
That's right. I mean, that was a long time ago. Folks, go check out the Kauffman, Kauffman Foundation. They have been in it for decades and really committed to the diversification. So did you apply? How did you get involved?
So it has changed significantly, because when I was a Kauffman Fellow, it was actually still with the Kauffman Foundation, and they actually paid my salary for 2 years. It was a very different thing than it is today. And so it was an application-based process. And then it was almost like a fraternity or sorority rush. We went to the Ritz-Carlton in Kansas City, and we literally went around and had one-on-ones with venture funds. And we pitched our wares, and you were a Kauffman Fellow, but you needed to find a mentor. And so I was very fortunate that in that process, I really clicked with the two founders of Weston Presidio. Michael Cronin and Michael Lazarus were both there.
Oh my gosh, that's wonderful.
And they were investing in consumer products, consumer retail, restaurants. And in my prior to business school experience, I was also investing in heavily consumer businesses, but more from the debt side at GE Capital and a little bit of equity. And so it was actually a very good fit. And so I joined them as a fellow.
And how long was the Kauffman Fellowship? Like, was that what you did? You were accepted into the program, and then you found your mentors, and how did that all work?
Yeah. So and not all venture funds had the balance sheet to be able to pay for you to join full-time after, but the firm I was with did. And so about 6 months after I joined, they made me a full-time offer, but the program was actually a 2-year program.
Got it.
And so I was in the Boston office for the first year. And then at the second year, they said, would you rather stay in Boston, or we now physically have room for you in San Francisco if you want to come out to San Francisco? So, and I was just a better cultural fit for the San Francisco office.
Oh, please. And weather. Hello.
And the weather. And so that's how I got out to San Francisco originally. And so I was with Weston Presidio for 7 years. I joined them in the middle of Fund 2, a $225 million fund. And then I was promoted to general partner in Fund 4, which was a $1.4 billion fund.
Oh my gosh. So I have a few questions because, first of all, I want to know why this lights you up, because you don't go and explore and pull on these threads without having some kind of a North Star, right? Something that just goes, I want to get up in the morning and do this. What was it about Weston Presidio? What was it about the role that you were going to play? And then please let us know how many other women were involved.
So first of all, I loved Weston Presidio because when I joined, it was a very lean team. It was, I think Michael and Michael were running the firm, and they had just promoted one person to be another general partner. And it was probably about 6 of us, and we knew everything that was going on within the firm. And we were investing in and doing due diligence on businesses that I thought were really interesting. And I loved being around entrepreneurs. I loved working with founders and seeing how we could add value in some way. It's interesting. Our pitch was very much one of, we were perfectly fine being a minority investor, and we only backed CEOs and management teams that we thought could really take it all the way. Yeah. And so there were some interesting business. I've always been incredibly curious. I looked at my entire career, and I'm like, what's the common denominator? And it really is asking questions. Yeah. And so, there's just been so many interesting businesses and entrepreneurs along the way. And that made me really passionate about going to work every day.
Absolutely. Because boy, that when you wrote a check, that was going to absolutely have an impact. Especially if you were focused on CPG, and all. And how about, were there any other women at the table at Weston Presidio?
It's interesting. The big answer is no, but over time it started to change. Michael Lazarus, who ran the San Francisco office, was a sales guy, and he understood that when you are pitching to entrepreneurs, it helps to be able to speak their language. And so he thought of me as his Midwestern woman. And so he was always looking for somebody with a Southern drawl, or looking for somebody from different ethnicities that he thought. So over time, we did have a woman of color, Daphne, who joined us later. Yeah. that was, really about it. It tended to be at the more junior levels. I was the only general partner of the firm ever.
Well, I just want to thank you for being that person, because, they brought you on, whatever was about the combination of you, this wonderful VC firm, private equity firm, brought you on to do deals at a level of, did you become partner? How did that growth opportunity within the company work for you?
Yes. So I was promoted from principal to general partner. But that was not without my own, being an advocate for myself.
Yeah.
I had someone in the firm that I had not seen eye to eye with who tried to sabotage my becoming partner.
Yeah.
And it was based on um, something that was not true.
Yeah.
And so I went and advocated, and I was ready to leave. And so, and they handled it incredibly well.
Excellent.
And so, but I absolutely had to advocate for myself.
Right. And it's really tough, folks. And this is, back during the .com days that Courtney began working there. So these were still times where women had to really think about how they were going to be bold, right? And have a voice, and what that voice looked like, because just like today, sometimes it comes off, oh, she's just a pushy broad, like there's something wrong with that. And other things that we would get judged as for those days. So thank you for sharing that. I'm so glad that you were able to see enough value in yourself, and also that you were willing to leave a situation, as much as you loved it, that was not going to serve you any longer, and that they took the right steps. Yay on that front. And, coming from a company that, raised millions with our .com from 98 to 2000, did you invest in any of the .coms? Do you have any good .com stories, or did you stay off in another corner? Because, folks, I got to tell you, we don't see this today, fortunately, but during the .com craze, the launch parties were not to be missed. They were friggin' awesome, lavish, ridiculously expensive, and we loved every minute of it. Were you involved at all in any?
So it was hard living in San Francisco and being in the investor community to not be very aware of what was happening in the .com space. I want to say, so we were consumer. And so you were starting to see the beginning of technology and consumer intersecting. Yeah. And we definitely had a bird's eye view of a lot of these companies. I mean, I remember eToys came into our office, and we used terms like, what's your inventory turnover? And they went, what? And so that scared the bejesus out of us, because, how can you manage a business with inventory and not know what inventory turnover is?
Exactly. And not to mention the ratio that you need to have in order to make somebody feel comfortable with that.
And so, as a result, we actually turned down a lot of these. Pets.com came into our office, and we had invested in the first retailer, big box retailer for pet retail. And one of the things we knew is that you put the 50-pound bags of dog food at the back of the store, and then consumers walk into the store and they buy all these impulse purchases on their way to go get the 50-pound bag of dog food. And the question we had was, how are you cost effectively going to ship 50-pound bags of dog food? And so we turned down Pets.com. But I will tell you, if we had actually invested in eToys at that round, we would have exited and had a very nice return.
Wow. Well, those are the things that you look back and say, oh, well, right?
It's true. You just make the best decisions you can with the information you have at the time that you have.
But, I love that you kept your thesis and your investment strategy there, because, folks, money was being thrown around left and right, similar to what we saw over the last 4 or 5 years. And, I've been watching a lot of the things, Courtney, a lot of things going on, going, did we not learn anything from 2000 at all?
Well, so I actually take a little, I think of it a little bit differently, because the businesses the businesses that were backed, in the .com era, many of them did not have the fundamental economics to be an ongoing viable business. And the businesses today, certainly the valuations might have gotten out of whack, but for the most part, these are real businesses that were based on real innovation, solving real problems for customers that needed these products. There's some exceptions, but I do think it's a very different issue.
You're absolutely right. And I'm going to throw out too, we didn't have any pitch preparations. Right now you can get the best advice. You can join accelerator programs. People can help you refine your one pager, your pitch deck, and that ups your game as a founder, because you sit there and you have to understand your numbers. You have to understand what's the LTV CAC ratio. And if you're saying, what's that, Ande, I've got a great video on the YouTube channel under Andelicious Advice on how to calculate the LTV CAC ratio. Just saying. I'm going to bring a couple of questions up here. Cindy, so good to hear from you. And she's asking, what are your thoughts on what I consider checkbox change? With the increased number of deals for female founders drawing from a decreased pool of funding, dropped from 3 to 4 to 2%, is there a way to support investors to lead around for a female founded company? Interesting question. So what you're saying, Cindy, is you're asking Courtney, by her investing. Okay, so she's tackling bias and valuations is what she's saying. So with the as a service platform, and we'll talk a little bit about that. I'm not sure about your question, Cindy, other than that's always a challenge that we're going to have, right, Courtney? Right now, we're still dealing with that.
Yes. And, I would just encourage, there are now a lot of funds out there that are focused on female founders. Yeah. And so I would encourage you to be reaching out to those, especially those that have recently raised a large amount of capital.
Right. So what I love about your background is that you got this great information. I went deep, folks, on, Weston Presidio, because it's a private equity firm. It was, like a boot camp for you, Courtney, right? I mean, you had to really learn about due diligence there, right?
Yes.
Yeah. Yes. So, then you went and decided to go launch your own business. Talk a little bit about that.
Yes. So I have found that I am better working in smaller organizations, not large organizations like GE Capital. And so Weston Presidio got large. There were a lot more general partners. There was a lot more money under management. And with that comes a certain degree of politics, a certain degree of you cannot have your finger on the pulse of everything that's going on when you have a larger organization. Right. And so I actually left with one of my mentors who had his own family foundation. And he said, listen, do what it is you're passionate about. Invest in these writing smaller checks, investing in earlier stage companies, not the larger deals that we ended up doing in $1 billion fund.
Right.
And so he gave me office space. And also just someone to talk to, which is so helpful. It's hard being a one-man band.
Yes.
And so along the way with Silver Partners, there were lots of things I worked on. It ended up being, did some sort of fundless sponsor kind of deals. But I also did have a partner at one time, and we were doing consulting work for early stage consumer businesses. And one of the things that I realized is, on paper, you could be a perfect partnership, but in practice, if you don't have the same values and you don't both have the same entrepreneurial instinct, it can be a disaster. So we had a company that we did work for, and she was a classic entrepreneur. At one point, she had more expenses than she could pay. And so she ended up not paying our invoices. And my business partner could not understand this. And he got very angry with me that he thought that I didn't care about not being paid. And I said, as I see it, we've got 3 options.
Right.
We can sue her. We can keep working and hope she someday pays us, or we can stop working until she pays us. Those are the 3 things we can do. And I'm happy to discuss any of those 3 things, but I'm not getting worked up about the fact she should be paying us and she's not.
Yeah.
Clearly, she's making the best decisions she can with the information she has. Regardless, he ended up moving to back to New York and went to work at IBM.
There we go. Where he didn't have to worry about those pesky details like being paid.
Yes, exactly.
And then you went on to become a managing partner at Weathergage Capital. And so what was that transition like for you?
So it's interesting. Because I had worked at Weston Presidio when it was $200 million fund, and then also when it was a $1.4 billion fund, I had opinions about what I thought made for a good fund. And so I had known Weston Presidio because one of the founders of of Weathergage was my first interview to become a Kauffman Fellow. She was the chief investment officer of the Kauffman Foundation. And so it was actually a mutual friend of mine, a gentleman by the name of Philip Yao, who said, the two of you guys should really connect. And so I ended up joining Weathergage in the back half of Fund 1. And then helped along with my partners to invest the rest of Fund 1, and then helped with raise and deploy Funds 2, 3, and 4. And then we had a separate account with a public pension in San Francisco.
And what was Weathergage's investment thesis?
So we were a diversified venture capital fund of funds, looking to produce the returns that everyone wants to get out of their venture portfolio. And so we invested with brand name venture funds. But we also always had an open door to new names. And we're always just looking for those managers that had the potential to knock the ball out of the park, and at the same time have a more muted risk. So you don't want the loss ratios to be high, but you want the multiples to be high.
And so share with the audience, because this is, people are always curious as they go out and seek capital from VCs, how did those VCs get that money, right? And that's where you come in. You're the institutional fund, so to speak, that VC managers appeal to, saying, oh, we've got a great thesis here. We're doing fintech, artificial intelligence, and we're raising this fund, and this is how we're going to be deploying it, et cetera. Let everybody share with everyone, what does that mean to be an institutional fund that funds funds?
So it is much easier to do due diligence on Benchmark, Sequoia, Excel than it is on emerging managers. So with traditional venture funds that have a long investment track record with realizations, you can do a lot of financial analysis and identify which partners have driven the returns. Is that partner still fully engaged with the general partnership? Is the fund size still appropriate for their investment strategy and where they are an exceptional investor as a firm? And then you look at the areas where they're investing, and are they still relevant with the entrepreneurs who matter in each of those spaces? You're also always trying to figure out if you invest in AI and you have not been with the most important companies within AI in the last 5 years, that's something we have to take into consideration, because maybe you're not as hungry as you once were. And so for established managers, you talk to each of them, you understand the data, you figure out how they're changing their thesis. When you're talking about emerging managers, that's a very different process. And
that's right.
And that's one of the reasons why we believe Recast deserves to exist, is because it is hard and it's more work, and you can't write big checks into emerging managers in venture because they tend to be raising right-sized funds.
Yeah. And so we'll get into that as we dive into Recast, but I just wanted the listeners to understand, because they are often in the process of looking for funds, seeking capital, and on their first journey and talking to VCs. And so this is such a great opportunity for them to understand, well, what's behind the curtain with VCs. And it's great to know who's backing these funds, founders. Okay. So if you're looking at a fund that's interested in putting money into you, I know it's like, oh my God, thank you. I need the money so badly. But you know how I feel about this. Protect yourself and your business. Know the fund. who's invested in the fund, where, what is their agenda? Get those questions, check sizes and everything. You can hop on over to buyacoffee.com/Ande Lyons. And I have those questions there for you. But thank you, Courtney, for sharing that background, because, what you did at Weathergage was so important in funding, brand names as well as some emerging. But then you made the decision to be more focused on emerging funds, which is so exciting. And I just, I'm curious because I know you co-founded Recast with another female, Sarah. I'd love for you to talk about this, this transition, because folks, I just want you to understand that in this world of venture capitalists, okay, here, I just want to give you these stats. All right. 58% of venture capitalists are white men. 20% are Asian men. 11% are white women. 6% are Asian women. 2% are Black men and 1% Black women. And 1% are Latinx men. And except for Jennifer from Mendoza Ventures, almost 0% are Latinx women. So in this world, now you have an institutional fund that Courtney and Sarah have founded that are looking through a different lens, and they look different as an institutional fund. So please share with everybody how you formed Recast Capital.
Yes. So Sarah and I were both at two different venture fund of funds, but we're really seeing the same thing at the same time. And we had known each other. We're both Kauffman Fellows. We both had been through the PE Win program and been to various conferences. We knew each other, but we never had this conversation. And it was another woman who we both were talking to, who is also an institutional LP. And she said, the two of you are really saying the same thing to me. You should really each talk to each other. And I had no idea she was loose in the saddle at Greenspring. But because we had both been institutionally trained investors in venture funds, we saw the world in a very similar way in terms of how you do due diligence on funds, what gets you excited, how you decide that you could actually generate outsized returns with this manager. And she was seeing that that there were emerging managers in venture that just didn't fit their portfolio. They couldn't write checks of that size. Instead, they wanted to build relationships with those managers. And once they got to a certain size, then they would invest.
And when you say certain size, 100 million?
I don't know the answer to that question.
Okay.
But it was frustrating to her because she realized that she was leaving some money on the table. And the other thing is, we both realized that when you had this explosion of emerging managers in venture that happened really over the last 6 years, 7 years, 10 years, it was so much more diverse than the incumbent managers, which was so jaw-dropping when we actually looked at the data. And so we spent a lot of time iterating on what we thought Recast could be, what we wanted, how we wanted to build the program. And so we ended up starting with an educational program, the Enablement Program. And it was in part because we saw that when we were at our respective firms, we were talking to lots of venture capital funds, and it was almost like Groundhog Day. Everyone was going through, similar issues, similar challenges. And so we thought, let's productize this and offer it to a larger group of individuals. And so we launched the Enablement Program about 2 years ago now. It's tuition free. 12 to 14 funds go through it. It's virtual. It will be virtual forever. So we can be as inclusive as possible in terms of geographies.
Sure.
For both our presenters as well as our participants. And it runs, 2 hours every week for 12 weeks.
Wonderful.
And and it has been a tremendous, very fulfilling thing to be a part of. And then Recast Capital is a platform to invest in and be supportive of emerging managers in venture with a diversity preference.
And how'd you come up with the name Recast?
So all of these things take more time than you want to just get going. You don't want to spend time with colors and a website and a name, but you do. And so we actually worked with a startup where they put out requests to people that actually come up with names. And we said what the criteria that we wanted to have. We didn't want to be the same. We didn't want to be, we were talking about how we wanted to change the nature of who is a venture capitalist today and make it more diverse. And so the name Recast really clicked with both of us, because we're trying to recast who is the face of a venture capitalist. And so we're very pleased with the name. And then we went through the coloring, the coloring scheme. And we told our diners, we said, we just are not going to do anything in blue. Right. And not even dark green, all the financial services colors. And so we ended up with orange.
Love that. Oh, I just think it's wonderful. And folks, every founder has a story, right? Including how they came up with the name. And I'm just so pleased to see two women charging ahead. You could have stayed in your positions and doing well, of course, and successful. But folks, just because you're really good and successful at something doesn't mean it makes your heart sing with joy. And I love that you and Sarah said, let's do more. And then, of course, it was a woman who introduced you two, because wait a minute, she's talking about this and then she's talking, you two need to meet. And that's also very important when you co-found a business. And speaking of founding a business, I want to just bring up Sandra. Let's see if I've got you right here. Yes, there you are. She's the co-founder and CEO of Legacy Shift, a market network platform that smart matches members with experts within their organizations and networks for life and career support. Oh my gosh, I'm fascinated by that. So is it legacyshift.com, Sandra? And also, it's so important, especially for, of any age, really, that we get those people who represent where we might want to go. We had Who Moved Our Cheese back in the day, right? But, you do grow and you want to know who are the places and folks. So I'm very curious. Tell us more if you are still around in the comment section, but we are cheering you on. And I can't wait to connect with you and learn more. And also just to remind folks that Cindy is tackling bias and valuations with her venture called Linking Ventures Valuations. And it's a service platform that produces a series of iterative and founder immersive valuations leading up to a priced round. Boy, is this a hot topic right now, isn't it, Courtney? We are giving founders the knowledge and power to communicate their value and valuation at the earliest stages to ensure founder investor fit and timing. You can see I'll put the links into the show notes, Cindy, LinkedIn at CLGUYON, or you can go to Twitter, Linking Ventures, and get the scoop. And thank you for tuning in today. And yes, Sandra, thank God for great mentors who open the door. It's so critical to everything that we're all doing. And yes, Ruth, I agree. That's a really great initiative, Courtney, especially making it virtual for easy access. Because, for example, one of my favorite folks, Courtney, Lolita Taub, she just launched a venture. I think they're going to fund and they're going to raise about 10 million is their first thing. Is there opportunity in funds that small for, bringing those emerging managers through your program?
Yeah, so Lolita actually went through our program, and so did Jennifer. Yes.
Oh, yay, Jennifer and Lolita, some of my favorites.
Yes,
Yay.
I agree.
Oh,
And so
that's
absolutely. I mean, we are the program really is the best fit for managers that are raising their first fund, or maybe their first fund was just a friends and family kind of a round, and now you're raising your first institutional fund. But what's beautiful about the program is that everybody's in the same stage. And so they benefit from just the network, because it can be lonely running your own business. And so one of the things that we create space for is for folks in the cohort to all get to know one another. And then we provide a Slack channel for everyone to continue having that ongoing relationship, to ask questions that might come up. We had the request to put in a travel Slack for if you happen to be in Chicago, would love to connect. And then we do have in-person events, probably about 3 or 4 a year, where we bring together anyone who happens to be in New York at this time, or San Francisco at this time, or Chicago, or Miami. And so it is interesting to see how tall someone is, because on Zoom, you have no idea how tall people are, but their personalities tend to be about the same.
But it sounds like it's the enablement program is the gift that keeps on giving, because they go through the program, but now they have what we like to call in the startup world social capital, right? And they're able to have colleagues. When I had Jennifer on the show, she was so transparent, because she talked about, and this has to be hard, when she wrote and handed the first check to the first founder, like her hand was shaking. And she said, "Oh my gosh, this is not the state of mind I should be having as a fund manager." And it was the first thing she did work on herself, was to shift her mindset. Do you work with the folks in the enablement program to help funders get
It's
ready
very
to invest?
interesting. We are very fortunate that we've had sponsors for our educational program that have really helped to amplify our voice and make us stronger in market. One of the things that those sponsors have allowed us to do is to offer executive coaching, at least so far, to our participants. And it's 6 sessions. We do not ask what is discussed, although we do ask in aggregate what are the types of conversations that are taking place. We want to, in our educational program on Zoom, is to talk about fundraising, more macro issues. And because we also have an investment vehicle, we understand that conversations about being nervous about giving your first check is not necessarily something you want to share with us in this forum. And so we allow the chance for the executive coaching to provide that type of a platform to have those conversations.
I love that. And so the folks that are coming through your program, and this is what I love about on your website, folks, you just need to visit recastcapital.com/enablement program, and you'll get all the scoop. But this is, create the change you want to see. This is what you and Sarah have done. And it says here, leveraging our experience, we created the Enablement Program, a new educational program to empower the next generation of venture capitalists. And so you've been around long enough to see the landscape change a lot. Even though I gave you the stats there, 58% of VCs are still white male. We're seeing, more come into the landscape, certainly more women. How about your program? What are you seeing within your program? Is there more diversity other than Jennifer and Lolita?
So first of all, I will tell you those statistics, which they're accurate, but if you look at the senior partner, the managing partner, the general partner, it is much more grim.
Wow.
Much more grim. And
can I just say, folks, this explains it, because even though you've got a female partner who's excited about your business and she says, "Oh, I know that we could win, come in for $1 million, we could do this," she still has to take it to the senior partner who's going to say, "I'm not feeling it."
That's absolutely right.
Wow.
But our educational program, I mean, we certainly are taking heterosexual white males, but we are looking for diverse, we believe the data that diversity of live life experiences and networks and points of view is going to produce superior returns. I mean, venture capital is very competitive. And if you're fishing in the same ponds as everyone else, you're unlikely to have as attractive of returns as if you were to be investing in ponds that are attractive but are underfished.
Right. And so let's use an example. One of my favorites, Maya Fund, 2 women in South America, Latin America, created a fund. Their first fund had 2 unicorns. I mean, nobody could have predicted that outcome. It was just fully, what is it when a fund, everybody gets their money back in 10 times? There's a special word for that. It's just not coming into my head. But it had a great outcome, and now they're on their second fund. And so, this is where you, as a funder of funds, have to be really discerning and really understanding. As you said earlier, have they gotten complacent, because they had a few wins in the beginning and now they think, or do they have their thumb on the pulse of a certain industry where they clearly know the founders are going to do it or not do it? Like, how does that bubble up, that higher level of certainty, Courtney?
So it is hard, right? You make mistakes when you invest in funds or invest in companies. And you're just trying to make the best decision you can with the information that you have. And one of the, it's interesting, there are many participants in the industry who have made enormous amounts of wealth, and they're still hungry and scrappy and hardworking, and they're come to the office every day, ready for bear. And so it's not that wealth in and of itself is a deterrent, but you do want to see that there's still that passion, that drive, that you're still going to, and emerging managers have that passion because they've got something to prove to themselves, something to prove to their investors, something to prove to the world. And so, and so analyzing that and being able to get comfort with the managers that you select, whether or not they should be in your program. And so one of the hard things about creating a diversified pool of funds is that you need to have diversification by vintage year, by, perhaps by stage, although with us, we're predominantly pre-seed and seed.
What's vintage year?
Vintage year. So, in our investment vehicle, we want to not just have all exposure in 2022 companies. We want to be able to say that we've got it, because in venture, vintage year matters. And so to the extent that you had pre-market correction and also post-market correction helps a portfolio. And so, and then you want to have diversification by underlying industry. So you might have a really interesting crypto fund, but I already have my crypto play in my portfolio and it's not going to be a fit. So unfortunately, you're saying no much more than you're saying yes in the fund investment side. And so that's why the educational program, we just wanted to be helpful to a larger percentage of the community.
Oh, for sure. Because I imagine, and please correct me if I'm wrong, like Hustle Fund, right? Mm-hmm. Former founders, which I personally have a bias. I prefer to get my money from someone who's actually led a company, founded a company, because I feel that they understand what I'm going through more than someone who graduated from Williams College and is really smart and is just crunching the numbers, with all due respect. Yep. Do you find in your enablement program that the founders that have coming through, they want to prove something to themselves, might be folks who have exited and now have some cash and they want to do their own fund?
So it's interesting. This happened about 10 years ago, this whole idea that really great entrepreneurs were not beholden, at least in the earliest stages of their development, of taking Sand Hill Road money. Yeah. And in fact, they wanted the founder. They wanted the folks that could write $1 million check instead of demanding that you take a $10 million check or $7 million check. Mm-hmm. And they found that those individuals who had actually been in the startup, wearing the startup hat themselves, actually could add real value to them in their earliest stage of development. And then for the Series A or the Series B, that's when you might take the Sand Hill Road capital or might take other forms of capital. But what your story is, Ande, is very analogous to what most entrepreneurs are trying to do. So one of the things we look at with emerging managers is usually they have some kind of value add to these entrepreneurs. You need to have something. And usually it's around helping them with customers, helping them with go-to-market strategy, helping them with recruiting, helping them with fundraising. There needs to be something that you articulate in your fundraising meeting with us that says how you're getting into these deals and why it is that you are networked with the entrepreneurs who matter and can actually get into these deals. And the other thing, I had a CEO last year who I was doing due diligence on a manager. And the manager said, in 2021, I cannot have a seed stage syndicate that's all white men who went to Stanford. I need to have, I need to have some diversity on my. So I think today, if you are an underrepresented investor in companies, you have to have this table stakes to be at the table. You have to add value. You have to be able to justify your position on these companies.
Right. So
tables.
Yeah. And so what I've seen happening a lot, Courtney, is, for example, we talked to Kimmy Pollock from Beta Boom. They bring founders in, they give them some capital, and they really make sure that they are nailing their MVP sales and hit the ground running. It's almost like shoring up their investment with them. Same with our great local new fund here in Boston called Visible Hands. They have an accelerator program, as does out of Atlanta, Zane Access, Zane Ventures, run by Shyla Bernie Greaves. And, again, these are funds that are helping their investments get a better chance and a better start. So is that what you're talking about, if they have programs like that?
Yes, that's exactly what I'm talking about. And you are very well versed in the diverse emerging manager.
I get them community. On the show. Like you, they trained me.
Beta Boom went through our educational program as well.
Great. So look at you. You got all my stars going through your program. I love it. But
right now, if you're a new entrepreneur and you're raising pre-seed or seed, I mean, the number of funds that you have the ability to get access to, you can be picky. I would encourage anyone that's taking capital from any venture fund that you actually do due diligence on those funds. Ande had talked about, making sure you know where their capital is coming from. One of the things that a lot of emerging managers do is that they have to take money. They take money mostly from friends and family or high net worth individuals. Those individuals tend to not be re-upping for fund to fund to fund. It's not. If they do exceptional investing, then their next fund, they can actually start to raise capital from more institutional capital, foundations, perhaps endowments. There's banks that are writing checks also, especially to diverse GPs. Those tend to be more stable forms of capital where that they have a high likelihood of being able to raise subsequent funds if that's of value to you.
Yeah. And Courtney, this is why I was so excited when your folks reached out to me, because I was like, oh, what a great segment, right? A great episode to talk about what's behind the venture funds from a woman who has been in the trenches, for several decades, but, understands due diligence, understands funding funds and what's behind it, because the more knowledgeable a founder is about the huge agenda, a lot of times, again, it's like, here's my hat out, please, fill it with money. You really need to dig deep into understanding how venture capital works and how they get funded. So I'm so grateful for that. And I love Cindy's question. Cindy says, what does the support community look like after the enablement program?
Yeah, so I alluded to it earlier. We have for online, we've got these Slack channels that are by class, and then also one just for everyone, depending on where you want to post information. And usually it's being used for, does anybody have a solution for this issue? What's your tech solution for this issue? I'm going to be at this conference. Is anyone else going to be at this conference? And then as I mentioned, we do in-person events, normally around conferences, but it could be around anything. Yeah. And so that's when we bring together everyone who happens to be in Miami on that date. And we just do a blast email or put it on the Slack channel or both to say, we're going to be at this location at this time. If you want to stop by, we'd love to see you in real life.
And when did you found Recast Capital?
2 years ago, 2020.
2 years ago. So what does success look like for you at the Enablement Program? And how are you going to measure that? And I mean, there's what success looks like today, right? But in 2 years, that success may look differently. But today, what does it look like?
It's interesting because the Enablement Program is not technically a nonprofit, but it kind of feels like a nonprofit. And we've had many individuals, actually one of our sponsors wanted us to quantify what is success. And they led us into, well, should we look and see what their fundraising success is after they've been in the program? And I kind of push back on that. I mean, certainly that's a metric, but if somebody makes the decision that they want to leave their firm or exit venture, I think that's actually a good outcome because we've only had actually, we haven't had that happen. We've had one person who left her firm, but then she went on to actually raise her own fund. But I do think that that's not the only metric for success. For me personally, success is the folks that have gone through our program amplifying our voice in market and saying great things about us. We also, at the end of each cohort, we ask everyone to give us feedback on each of the sessions that have happened and then in aggregate. And it warms the heart to see those responses and to see that we're giving our clients something that they think is valuable. The other thing that has happened, which I never expected, is they're actually introducing us to investors, to their investors, to help us on our own fundraising journey.
Oh, that's wonderful.
Which I would never have guessed. But the other thing we are keeping track of is the number of funds that have gone through our program, the diversity metrics of the managers that have gone through our program. And then we have these survey results to say that, whether or not the folks that have gone through our program think it is of value.
And it's free, folks. Like, that's what we love, because, it just shows that this is a purpose-driven product for you, that you're there to really help these emerging fund managers that weren't hanging out at Weston Presidio or all the other big firms and getting their training there. They are committed to funding companies that perhaps look like them, or in a category in an industry that they are really strongly aligned with, and because having maybe been a founder before or in a company where they know how much that funding leverages their ability to succeed. So I am so excited for everything you're doing. Over the years, and now as a founder, right, you have been up against bias, Courtney, and as a woman, especially in venture capital. And I'm curious, is how have you managed your mindset? There's a few great shows that I love to watch. One of them is Goliath, and there's a character on there that I love her, Patty. But we can't be Patties. We can watch Patty go and slap people around, but we have to keep and maintain a certain level of calm, cool, and collected when we see the microaggressions from our male counterparts. So what have you done that would help other women just in the world, period, are working as founders or in VCs, to help their mindset when they're up against some of the microaggressions and other biases? Yes,
they are real. They are very real. And through our enablement program, we've been hearing many stories which are not pleasant. I think that having your true north and really believing in what you're doing, and finding a way through yoga or through meditation or through a therapist to get beyond the imposter syndrome fears and voices in your head. And one of the things that Sarah and I have as our true north is we really believe in the importance of institutional investors investing in emerging managers in venture to get the return they want to get out of venture. And we just keep going back. And if we meet somebody who that doesn't resonate with, or you just keep going to the next one. You've got to, it's interesting. An entrepreneur once told me, you're never as good as your best days, and you're never as bad as your worst days. You have to figure out a way to just, keep moving forward,
and find the equilibrium, folks. Right. Oh, that's such great advice. And as you've now, 2 years as a full bona fide entrepreneur, you're not on payroll. This is you running the show. How has entrepreneurship served you? How are you seeing it serving you, both on a professional level, but also on that personal growth level?
I have to tell you, I'm a Midwestern girl who was expected to just, get that the proverbial gold watch, work hard. And it just was really the Kauffman Fellowship that started me on this journey. And I realized that I am passionate about working at a small firm. And with Recast, I am able to actually start a firm with someone I want to start it with. that we're a great partnership, and we can create the business we want to create bottoms up. The culture we want to create, the website we want to create, our model. I mean, it is, I'm not making nearly as much money as I've ever made in my life, but I could not be more filled with hope and joy. And I get excited waking up every morning.
Are you kidding, Courtney? Anybody listening or watching this is feeling that. I've got goosebumps. I can feel that passion, like, yes, we've got this. And it's like, oh my gosh.
Well,
Bottle
thank
that
you.
up. Congratulations to both you and Sarah on so many levels. Most importantly, providing the best representation for other women to aspire to do something similar and get more foothold into this industry. But also congratulations on the cohort, the enablement program, and what you're doing and the change you're creating because of what you want to see out there and the help that you're providing emerging managers. It's really, really wonderful. And I'm so delighted you joined me today. Thank you so much.
Thank you, Ande. It's been a real pleasure.
Oh, I'm going to pop you in the green room and wrap the show up. We got so many great things today. Thank you, Courtney.
Thank you.
Oh my gosh, everyone. I know that it was a lot to take in, but this is such an important part of your fundraising journey, really understanding what's behind it all. And Courtney did a terrific job in not only sharing her phenomenal and fascinating founder journey and career journey that led her to where she is today and that beautifully and uniquely prepared her to do this remarkable work in the world at Recast Capital. So be sure to go and check them out. And let me share with you who's coming on the show on Tuesday, September 6th. 12 p.m. EST. We're chatting with Bethany Corbin, an experienced healthcare and femtech attorney, and she believes the international femtech community has the collective power to transform the standard of care for women's health. And as a member of this industry, her goal is to spread awareness of femtech, disseminate meaningful insights that allow new founders, and entrepreneurs to bring their health innovations to life and mentor the next generation of femtech leaders. Plus, she's got some great stories to share. I'm just saying. You know what to do to join us, get this alert, join the Startup Life Live meetup group, and you'll receive an alert of the new show. You can always find me here on LinkedIn, Facebook, Twitter, and YouTube. Until next time, I am cheering you on here from Boston, and I'm wishing you a delicious day everywhere you glow. See you next time, everyone.